Hello again, and welcome back to Operations Management. In the past couple of sessions, we've been looking at the powerful equation known as Little's Law. Little's Law shows the relationship between inventory, flow time, and throughput rate. And in our last session, we actually looked at units going through a process flow diagram. In this one, we're going to take a look at using Little's Law with financials. Items that we can get off of an income statement or a balance sheet. Because a lot of times we don't have the luxury of having an entire process flow diagram that we can keep track of. But what we do have is financials. We can see how efficient an organization is just by looking at the financial statement and applying Little's Law. As always, with Little's Law, we're concerned with a stable process, so that the average inflow going into the process equals the average outflow coming out of the process. This way, we don't have to deal with individual fluctuations, day-to-day fluctuations. We're only going to be looking at averages. Little's Law concerns itself with three particular operational measures: flow time, how long it takes to get through the process; inventory, how much is going on in the process; and the throughput rate, what's going through the process in a given time. When we're looking at financials, we're looking at money, more specifically dollars or other kinds of currency, in terms of how long does it take for a dollar to get through the entire process, how many dollars are sitting in inventory, and how many dollars go through the entire process in a day, a year, a month, and most usually we're looking at it in terms of a year. So let's take a simple example. Here's a company called LRDR, and here are their year-end financials. We have a value for net sales, a cost of goods sold, net income, and inventories. So we need to identify the correct financials from this statement here to apply them to Little's Law. So we need to understand which value here is going to be our throughput rate and which value here is going to represent our inventories. Let's take a look at it on a diagram. Inventories is pretty easy. Straight off the statement there, we saw that the inventory was $9,646. And there it is right in the diagram. But the flow rate might be a little bit more difficult to understand. Flow rate is dollars that we put into the process. Okay? So we're concerned with our cost of goods sold. Sometimes cost of sales is what it's called. But these are the dollars that we are putting into the process to create the item that goes out to the customer. That's why we use cost of goods sold. It's the dollars entering into the process. So now we have a value for the flow rate because we know how much money was spent in cost of goods sold in a year, and we have a value for the inventory, what's currently sitting in the process. So using the version of Little's Law that says flow time equals our inventory divided by our throughput rate, we can calculate how long it takes for a single dollar to go from the beginning of the process all the way through to the end. So let's go take a look at that. Our throughput rate was $79,183 per year. Again, that was our cost of goods sold, the dollars that got entered into the process. At the end of the year, we had $9,646 in inventory. So now to calculate the flow time, we just take our inventory and divide it by the throughput rate. And it gives us 0.122 years. Remember, our throughput rate was in dollars per year, so our flow time is in years as well, because our unit of time has to match. But a lot of people have difficulty understanding what 0.122 years is, so we just multiply it by 52 weeks in a year, and that's how we get 6.33 weeks. So what this tells us is it takes 6.33 weeks for a single dollar to enter the process for it to come out and be able to be billed to the customer. So what does that mean for us? Well, it could be one of our metrics. How do we evaluate how efficient our organization is? If there are other companies in our same industry that have a flow time of only 4 weeks, we are not nearly as efficient in getting our processes done as they are. If, however, there are other organizations that are taking 10 weeks, then we're doing better than they are. So that's one of the things that we can use financials for. We're trying to figure out how long it takes for items to get through our entire process. We're going to continue with Little's Law in the next session. I'll see you then.